Welcome to the first market update with Galileo Capital for January 2022. Some of us are saying that actually this is 2020, we're just having our third shot at it to try and get it right. It's been another fascinating year last year in the investment markets. If we look at the JSE, the performance of the JSE was just more than 29% for the calendar year. And that makes it one of the very best years of the stock market in South Africa for a year, for a normal calendar year. Interestingly, with the rand not doing so well in the 2021 year, the JSE still outperformed the world markets, even when you account for currency. So in dollar terms, the JSE delivered a return of just more than 4%, which was slightly better than the world stock market index of 4% a year as well. So it was fractions better by the JSE. Wonderful to see double-digit returns from the JSE over longer periods of time as well. So if I look at the last 5 years, we're now in a position where the local stock market has given us more than 11% a year per year for 5 years. So for a lot of our clients who have been retired for most of that time, they've been struggling with their pensions, not delivering good returns, and now we're starting to see some of those returns coming back with the markets, both in South Africa and globally, delivering very good returns for investors. So looking back, despite all the economic news, despite all the politics, the looting and all of the stuff that happened in 2021, it was a fantastic year for investors in our country and actually globally. Looking ahead now, we start to think about some big themes, both in South Africa and what's going on around the world. And I think the first big one will be the valuation of the American stock market. It's something that gets a lot of attention, and we see it in the WhatsApp messages that we get from our clients who send us these really horrifying articles written by talking heads in America predicting the end of the world again, usually relating to some stock market crash. And it's important to note that for every stock market crash that actually happens, the predictors or the forecasters predict 2 or 3 times more crashes than actually take place. So when you get articles like that, or when you see them, or when your friends are forwarding them to you, just remember that there are always reasons why the stock market will crash. That doesn't mean that those reasons actually come true, and it doesn't mean that the market does fall over because someone predicted it. If we look at valuations in America, that's a case in point. Valuations are high in America, especially the big tech companies like Amazon, like Alphabet, like Meta, which used to be the name for Facebook, which is now the name for Facebook. They are expensive, and there's nothing we can say to justify their prices other than these are expensive, very good companies. But that doesn't mean every share in America is expensive. And it doesn't mean that because the Microsoft share price is high, that the share price will collapse. It might just stay expensive and not go up anymore for a 1 or 3 or 5 year period until the valuations become more reasonable. But I think the key point from my perspective is be very careful of investing according to predictions, and especially predictions that generate a lot of cortisol, those that make us fearful, because people like to make predictions that cause fear. That's what gets them to be read, and that's what gets them on TV, that's what gets them on the radio, but that doesn't mean that those are accurate predictions. And I think that's the key in this whole thing is when you develop an investment strategy, it's really important for you to make sure that the strategy is built around your circumstances, your requirements and your objectives, and not on some talking head's prediction about what they think is going to happen in the next 6 or 12 months. Inevitably, predictions are wrong. We've seen the studies numerous times from economists around the world who cannot even get the prediction of their currency right. In other words, they'll be asked, do you think the dollar is going to go up or is it going to go down? They're not asking by how much, just simply the direction of the dollar. More than half of economists get that prediction wrong every single year, and they have done for more than 50 years. So just be careful of predictions. It's they're very exciting, they're very nice to talk about. That you sound very intelligent when you make the predictions, but it doesn't mean that when you make an investment decision that's how you should invest your money. So for me, the next big theme will be around inflation in America. It is a theme that's not going away. It was something that was spoken about in the last 3 months of 21. And looking at that, it seems like inflation is persisting in the US. And that's a concern because it means that the Federal Reserve in the States will have to raise interest rates quite quickly to stop the animal of inflation. And once inflation starts in an economy, it can be quite difficult to stop it. So it's something that reserve banks around the world are very scared of. So the Federal Reserve in America will take a very dim view of inflation and will take very proactive action to make sure that they control inflation in the US. And that means rising rates. What does that mean for the rand? It usually means bad news for the rand, because as interest rates go up in America, so people move money from overseas markets back into the US and into the dollar, where they can start earning interest again, which hasn't been the case for the last few years. So it won't be great for the rand. To compensate for that, we do see a continued demand around the world for commodities. In other words, iron, copper, gold, oil, palladium, platinum, all of those. There is still a demand around the world for those, and that usually means good news for the emerging markets, and in particular the JSE, and even more particularly the rand, because foreigners need to buy our commodities if they want to buy palladium and platinum, gold and the like. So we have got some kind of confusing signals from the world markets, with pressure to go, to take money away from world markets back into the US to cater for the higher interest rates, but at the same time, pressure to go into emerging markets to buy commodities. And then if I look at the surveys of the big fund managers around the world, where are they putting their money? A lot of them are talking about emerging markets as a major theme for the next 5 to 10 years. It's a theme that isn't new. It's been around for the last year or two. I think the pandemic put a big kind of spoke in the wheel for investors moving the money out of the US into emerging markets. But as the COVID fears go away, so we'll see investors looking for value again. And the only place that they will find value in substantial quantity will be in emerging markets. The other theme attached to that will be the regulation of the big tech companies and other businesses in China. We did see the Chinese government taking fairly drastic action in 21 around tech companies and trying to regulate them even more than they've done in the past. We think that theme will not go away. So it's something clearly that the Chinese government are concerned about. But it's important to give that a context. If we look at regulators in Europe and in the US, they are also deeply concerned about the very large tech companies in those markets and about the monopolistic power of those big tech businesses. The difference is that those big companies in the US and in Europe will use lobbyists to drag out regulation as long as possible in their home countries, whereas the Chinese just implement regulation extremely quickly. Which strategy is better will be up for debate for a number of years, but we don't think that this is a theme where China is suddenly becoming more communist and less business friendly. We just think it's very targeted, very specific regulation, and if it works, might make the Chinese economy even more competitive and even more productive, and that will be good for investors around the world. So again, the fear-mongering around what's going on in China is important to have a context and to know that maybe it's not as scary as we all think. I think also we can't ignore COVID as a theme. That's been with us for 600 and something days now, and something that bothers a lot of investors around the world. If we look at the way that Omicron has worked in the world kind of system, we see that it is certainly changing and adapting the way that COVID is working, becoming less harmful to people, although it is becoming more infectious. It is our view that sometime in 2022, the economies around the world will start to learn to live with COVID rather than trying to lock down and shut out COVID, because they've realized that that's a futile exercise. And as that happens and more people are vaccinated and COVID itself becomes less harmful to people's lives, so we'll see politicians becoming more comfortable with the phrase of living with COVID rather than just shutting it out and taking drastic action. And that's critical for our economy. It's critical for global economies around the world. And we think that will happen, probably towards the latter half of the year from the Northern Hemisphere summer onwards. And then I think, for South Africans making investment decisions here, there are forecasts that the JSE will deliver another decent year in 2022. As I've just spoken about with predictions, be careful that you don't take those too seriously. It might be nice to hear and it might be exciting, but we don't know what that will look like. So from our perspective, make sure that you have the correct asset allocations, the correct allocations to the JSE, to global markets, to cash, to bonds, and to property companies. Don't be too radical in your actions in terms of moving assets from one place to another in an all or nothing kind of scenario. If you're worried about valuations in America, that doesn't mean you sell all your shares in America and around the world, because you're worried about the stock market crashing. It could just as easily happen that the European and global emerging markets have a fantastic year while the American market does nothing. So just be careful that you maintain a balanced view on what's going on with your investments. We haven't changed our currency view, so we still think 15 Rand 50 to the dollar is the right level to convert your rands into dollars. So when the rand is sitting below 15 Rand 50, in other words, let's say 15 Rand, we think that that's a good level. If it's sitting at 16 or 17 Rand, we think you should be patient and wait for the rand to come back to you. On a final point, just know that it's coming to the end of the tax year, which means that if you haven't topped up your retirement annuity or tax-free savings accounts, you've only got till the end of February to do so. So we suggest you take advantage of those opportunities now and make sure that you are correctly positioned in those investments and all others for the year ahead. On that note, we wish you all the best for 2022. We think it's going to be a great year. I think it's time for us to kind of raise our heads as an economy and start to look around and start to build our economy, build our businesses again, and you know, kind of take our heads out of that shelter mode and get ourselves moving forward again. For the politics in South Africa, we think it's going to be an interesting year of coalition, so that's something to watch. But we think that there will be some more good news around Eskom and Transnet and the restructuring of those businesses as we go. We'll keep you posted in the months ahead, and thank you for your support, and we look forward to working with you in this year ahead.